Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURCHF because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that we have a market which has created a very strong impulse to the downside and started a correction. However, at the moment it is once again moving to the downside. But this is only the start of the month. We still have almost 20 days to still go. So we are just past 1/3 of the month. So there is a very good probability that we will still see the rejection to the upside and this correction to continue. That is definitely a possibility. So at least by looking here at the market from a monthly perspective, it seems like we got the impulse, but the correction has really yet to come. Now, if we go down on the weekly time frame, what do we see? Now, from a weekly perspective, we can immediately understand why the market is creating this rejection. In fact, in all this impulse to the downside, there is one candle which is not related to the move, which is this green candle here, indicating how, in fact, here we had previous weekly support, which is now term resistance, which we expected the market to retest, but also to reject to the downside, which is in fact what the market is currently doing. So we are currently rejecting previous weekly support, which is now turned resistance. Unless we will manage to break above this level, we cannot see the deeper correction that we would like to see on the monthly time frame. It's simply impossible because this area will continue to reject the level. We need to see a weekly close above the zone. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can see that at least in the short term, we could in fact expect a rejection to the upside. In fact, we can notice how in creating this move to the downside, the market is also creating this M pattern. And in general, after the creation of an M pattern, what we would like to see is for the market to create a rejection to the upside to go and complete the pattern itself with the previous support term resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CHF, we can see how with the last reports, net positions have been getting a little bit stronger. However, with the last report specifically, they started to get more negative, going from minus 2.2k to minus 4k, with 742 shorts added with the last report from an institutional perspective and 1,000 longs getting closed. Now, this makes the CHF weaker, and a weak CHF is exactly what we need for EURCHF to create a rejection to the upside. If we go and see what we have on the euro, we can see how the euro has been getting stronger with the last report, going from minus 47 to minus 36k net positions, with 8.3k shorts closed from an institutional perspective and 3k longs getting opened. So the euro has been getting stronger, with the last report CHF weaker, meaning that that is exactly what we need in order for EURCHF to actually create this short-term rejection to the upside and complete the M pattern at the neckline. So how we could be approaching this potential rejection to the upside? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to access one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which puts together everything that you need as a trader all in one interface, the trading station software, and If you scroll lower past the testimonials, you will see that here at the moment I'm running a massive promotion in which you have a big discount on the upfront cost of the mentorship program, and I have also partnered with the forex broker Blueberry Markets, and if you open an account with them through the student dashboard, you can get a refund of the mentorship program credited back in your trading account. And if you scroll lower, you will see that you have the possibility here to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I'll see you in my next video.